If you started investing a few years ago, probably your first reflex was to go and look out for ETF, right? ETF, they offer you wide diversification, they do it professionally, and it's pretty cheap compared to mutual funds. So it's pretty much like the perfect investment vehicle for any investors who wants to start or doesn't want to spend like hours looking at financial statements. But did you know that you can actually invest in those who are making ETFs? So today we're looking at one of my top holdings, BlackRock, that is in my pension plan portfolio. So we're going to look at three things: the business model, the reason why I have it in my portfolio, so my investment thesis, and finally the role BlackRock plays in my portfolio. Dividend investors, bonjour. My name is Mike Héroux. I'm the founder of Dividend Stocks, and I am a passionate investor. Every week, I'm giving you a video about the stock market, about stocks in my portfolio, or a few tricks to make your portfolio better so you can invest with more conviction. Today, we're talking about BlackRock, one of my favorite holdings. This one, I really wanted to buy it for a long time. And at one point, I thought, it's expensive. I don't know, like the price is close to $1,000 today. Funny enough, and fortunately, I was able to get it around $500. So good for me. Back in 2018, the market crashed, and as an asset manager, it took a big hit, and that was a great entry point. So BlackRock rated, pro rating at 4, dividend safety score at 4, yield almost at 2%. So not a big dividend payer, but definitely a strong dividend grower. More than 10 years of consecutive dividend increase. You can count on that company to keep increasing its paycheck every single year. So if you're looking for a company that will help you beat the inflation, BlackRock's dividend growth rate will be definitely higher than 5% in 2022. But first, let's talk about its business model. So BlackRock is the world's largest asset manager. Over $10 trillion in assets under management. It's kind of crazy, right? It can pretty much buy a country with all that assets and run it like it was like one of the most richest country in the world. So what they do is they offer pretty much all kind of investment vehicle that you can think of. We're talking about portfolio models, ETF, factor investing, equities, fixed income, alternative assets, cash, name it. But the role and the way they do it is they have such a large scale and such wide network of distribution. They can package all kind of investment, make them fit together, and make it easy for both retail and institutional investor to invest moving forward. Now, what I like the most about this company, the first thing is there are so much growth opportunities in this market. BlackRock is the largest player, but the asset management industry, the asset management playground is so large. There's so much money that even $10 trillion is not that much. As you can see, they only have 3% of the clients' whole portfolios across the world. Kind of crazy when you think about it, when it's the largest one. They're the largest ETF manufacturers as well. Way ahead Vanguard, way ahead any other ETF manufacturers. So they have this leadership position, and yet there's plenty of space for them to grow organically. The second thing I love, obviously, I mentioned it a couple of times, ETF. ETF investing has been trending for more than a decade now. We see year after year money going from mutual funds going towards ETF. I mean, it's a fun and easy way to invest. It makes things simple. You can target specific sectors, specific approach like dividend growth investing, for example, and you do it with like a simple click. Everything is professionally managed in the background. And as you can see, both retail investors, but also institutional investors are using ETF to complement their portfolio. double-digit growth here. Last year in 2020, we're talking about almost 5 billions in revenue. So it's about like 20% of how BlackRock, what they're making between 20-25% per year. So a big chunk of their business model, and it's going to keep up this way. There's a strong trend here, but as I mentioned earlier, a lot of money to go there. There's still a lot of people investing in mutual funds paying like 1.5, 2%. At one point, they will pay like under 0.10% for some of ETF. So BlackRock will continue to innovate into new product offering as well. And will definitely continue to grow in importance in their business model. One other thing that I love about BlackRock is their platform, Aladdin. They have built that platform to help investors and also institutional investors to have a global view of the risk of portfolio management, how their portfolio react throughout time, throughout crisis. So it's really a platform that will obviously use BlackRock products as suggestion as well, but it's a complete platform using artificial intelligence to help portfolio managers, regardless if you're managing $10,000 or if you're managing $10 million or $100 million, you'll be able to use this kind of platform to put it to your advantage, making things simple and follow a straightforward strategy. So it's definitely something that a lot of institutional investors will look out in the future. We know that we have a lot of rules around retirement planning going forward. Lots of countries, they know that they have this problem where we have an aging population, but it's not everybody that has a clear retirement plan. So making investment accessible to those investors is crucial, and BlackRock through Aladdin will have to play a major role in this. So definitely more growth to come in this place. What I like about Aladdin as well is that you have pretty much everything that you can find here. It's about finding sustainable investment strategies, being flexible, having an holistic approach through wealth management. They have integrated all kind of information and data system into their ecosystem. So they will help you manage pretty much everything from A to Z on the same platform. Those projects would have not been possible if BlackRock was a small player, but as a leader in the market, as the largest player in this playground, it's relatively easy for them to go chase any kind of trends. So they did it with portfolio management and retirement planning. They did it with ETF, but they're also doing it with alternative assets, emerging markets, and ESG investing. So they are everywhere investors wants to invest. They can offer all kind of products, and this is what I really like about BlackRock. Now, for its role in our portfolio, as you can see on the dividend triangle, this is definitely a growth-oriented stock. Price went up big time over the past 5 years, but when you look at revenue, earnings, and dividend growth trend, they're pretty much following the same line as well. Everything is going up. It's relatively normal, especially when you have a bull market like this. The more investors are willing to invest money on the stock market, well, the more assets manager will make money because they're usually generating revenue on assets under management. So the more you grow, the more you make money, and the more you scale and you make profit out of it. This is exactly the system that BlackRock has been performed. However, a lot of investors will think, oh yeah, but BlackRock is interesting if you're younger. It's a small dividend. Everything is like put towards growth. Well, actually, it also has a role of stability in my portfolio. I really like this graph that they have produced, showing you that regardless if the market goes up or down, they're still able to generate organic growth. So even when the market is not doing well, most asset manager will have a really tough year, but because BlackRock is able to offer you a wide variety of products, most of the time what's going to happen is that you're going to have investors moving from one product to another. So yes, if you move towards fixed income or towards cash or liquidity investment vehicle, it will be less profitable for BlackRock, but at the same time, they keep you as a client. So the organic growth will still be there. So yes, revenue are going to decline a little bit, but overall, they're still going to be able to manage some growth out of a bad period. And when we have a bull market, this is definitely a great stock to have. So in between growth and stability, I'd say that BlackRock offers both. It doesn't offer tons of income. I get that. So as for income seeking investors, it may not worth it, but at the same time, I'd rather have a thriving business in the asset management sector than another one paying a generous yield but going sideways and maybe eventually having problems because they're losing market share. This is not the case about BlackRock. They're actually growing, and I think they're going to keep up growing in the upcoming years as well. Look out for a great and generous dividend increase at the beginning of 2022. They usually announce it during the first quarter, so it's right on time right now. You can buy it before the end of the year, and you'll get another dividend increase announcement in a few months. I hope that you have enjoyed this video. Don't forget to give me a thumbs up. This helps the channel to grow. This helps me to help more investors like you to invest with more conviction. And until the next video, stay invested.